It hasn't been audited. The gold stock hasn't really been audited since the 50s. So the PBOC, when it purchases it directly, it's supposed to report it to the IMF. But if it's purchased by the PLA or a proxy bank, a commercial bank, or a sovereign wealth fund on behalf of the PBOC, none of these things are reported. If they purchase gold that is under the 999 purity, they don't have to report that either. So they buy the doré and the concentrate from the miners and bring it home and refine it themselves. They're the largest producer, accumulator of gold in the world. Alistair MacLeod 2 years ago was saying he believed they had 38,000 metric tons, 5 times what we do, 18,000 by the people, 20 by the state. They've been telling their people for years to buy gold and incentivizing them to do so. So my guess is that, let's just pretend that the West has all the gold they say they do. There's just giant IOU stickers on top of the bars. I don't know. It's annoying to me that they would be anything less than transparent. And I think it signals to the world that, it's just, it lacks trust. It would be enough of a reason, I think, or a accentuation of all of the reasons that brought these countries together. It's only more of the same. And you can't force other countries to take your currency, especially when it has been mismanaged the way that ours has, creating $100,000 worth of debt per second, 24/7, using these types of sanctions and threats of tariffs to bully people into taking it, or countries into taking it. It's a mistake. In fact, I think it only strengthens the resolve of the countries standing behind it. Is it a bluff? I don't know. And then on the other hand, in 2016, he did an interview, Trump did, where he mentioned, look, it would be wonderful, he said, to go back to a gold standard, although he acknowledged that there would be substantial challenges. And of course, we talk about Judy Shelton. She's known for not only her advocacy of the gold standard, but also she's been very vocal recently about issuing treasury bonds with a lower coupon rate, but then yet redeemable in gold down the road to give demand to a treasury market that is certainly losing popularity and demand. And of course, Scott Bessent, the treasury secretary, his new nominee, has come out and publicly said that gold is his biggest holding. He is also an advocate for injecting, I think you could say, sound money into the system. So on one hand, I think there's evidence that he's thought about tying to some degree our system to gold, although we haven't heard much about it recently. There have, been rumblings of it really since 2016. On the other hand, I think it's overplaying his card. I think it's a mistake to go around threatening. This is not how you reestablish confidence. This is not how you rekindle relationships that have been bruised and battered over the last 4 years. I think it's the wrong move. And if I had to guess, more posturing than anything, Jesse.
The global financial system is undergoing a transformation of seismic proportions. Andy Schectman's insights into gold and silver highlight the vulnerabilities of the current monetary framework and the growing role of precious metals in stabilizing economies. At its core, this discussion underscores one critical truth. Trust is the bedrock of any financial system. Without it, the system falters. This theme resonates strongly as we examine Schectman's analysis of global trade, gold reserves, and the strategic maneuvers of nations like China. Schectman points to the United States' aggressive use of sanctions and tariffs as a double-edged sword. While these tools have been effective in exerting pressure on other nations, they have also fostered resentment and pushed countries to seek alternatives to the US dollar. You can't force other countries to take your currency, Schectman asserts, especially when that currency has been mismanaged to the tune of $100,000 in debt accumulation per second. This staggering level of debt, combined with policies that weaponize the dollar, has accelerated the formation of alliances among nations seeking to reduce their dependence on the greenback. The BRICS bloc, which already commands a significant share of global GDP and trade, has been actively exploring alternatives to the dollar. Gold, with its universal appeal and historical role as a store of value, has emerged as a cornerstone of this strategy. In 2016, then presidential candidate Donald Trump floated the idea of returning to a gold standard. While he acknowledged the challenges of such a move, The mere suggestion was enough to spark debate. Today, voices like Judy Shelton advocate for innovative approaches such as issuing treasury bonds redeemable in gold to restore confidence in the U.S. financial system. Schectman also notes that Scott Pence, the new Treasury Secretary nominee, has publicly disclosed gold as his largest personal holding. These developments suggest a growing recognition of gold's role in ensuring monetary stability. However, the broader U.S. policy stance remains conflicted. On one hand, there is a need to inspire confidence. On the other, there's a tendency to alienate allies through unilateral actions. One of the most contentious issues in the gold market is the lack of transparency surrounding the U.S. gold reserves. The last comprehensive audit of Fort Knox occurred in the 1950s. Efforts by figures like Ron Paul to push for a modern audit have been repeatedly blocked. This lack of accountability undermines trust in the system. Transparency is what creates trust and confidence, Schectman emphasizes. Without it, suspicions arise. For instance, there is widespread speculation that much of the gold held by Western nations has been leased out or pledged to suppress prices. If this is true, it would represent a significant erosion of trust in the system. In stark contrast, China's approach to gold accumulation has been both aggressive and strategic. As the world's largest producer and importer of gold, China has consistently downplayed its official holdings, reporting figures that many experts, including Schectman, consider grossly understated. China's gold accumulation strategy is multifaceted and shrouded in secrecy. The country not only mines hundreds of metric tons annually, but also imports vast quantities through various channels. Moreover, Chinese entities, including the People's Liberation Army, PLA, purchase gold in forms that are not required to be reported to the IMF. This includes doré bars and concentrates, which are further refined domestically. Estimates from analysts like Alistair MacLeod suggest that China's actual gold reserves could be as high as 38,000 metric tons, 5 times the official U.S. reserves. If accurate, this would position China as the dominant player in the global gold market, with far-reaching implications for the international monetary system. The reluctance of the U.S. to audit its gold reserves only adds fuel to the fire. If the gold is indeed there, why not prove it? Schectman argues that this lack of transparency signals weakness and diminishes confidence in the U.S. financial system. In a world where trust is increasingly tied to tangible assets, the importance of gold cannot be overstated. Gold's role as a stabilizing force is not merely theoretical. During times of crisis, it has consistently served as a safe haven. Its finite supply and universal acceptance make it uniquely suited to anchor monetary systems. For investors, gold represents not just an asset, but a hedge against a systemic risk.
It hasn't been audited. The gold stock hasn't really been audited since the 50s. Ron Paul has floated bills over the years to audit Fort Knox, and they were turned down. Transparency is what creates trust and confidence. The lack of transparency creates suspicion. When we talk about China, look, my whole career, Jesse, people would say the numbers that they are telling us in terms of their gold holdings are crap, that they were stuck at around 1,200 metric tons for years and years, and they were never updated. They are the largest producer of gold in the world, i.e. that, they just found this huge stash, but they're the largest producer in the world, and they've been producing between 300 and 500 metric tons a year for years. That's not reflective of the numbers that they tell us, 23, 24, 2,500 metric tons. Now that's not right, not even remotely. Not only that, they're the largest producer and importer in the world. They have been flying around in interviews I've done with Sean Kuhn of Dolly Varden. They've been flying around the world buying doré and concentrate in both silver and gold from miners directly, disintermediating the commercial banks, disintermediating the market. They buy the concentrate and the doré, which are crudely refined bars, before they go to the refineries to be further refined, and bring them home to China to further refine it. They're taking delivery off of the world's exchanges left and right. And then they tell the world that they've stopped buying gold for a few months, and everyone reacts like it's the craziest thing in the world. Yet they're lying about it because the import-export numbers tell a different story. Not to mention when they purchase gold through the or through the People's Liberation Army. So the PBOC, when it purchases it directly, it's supposed to report it to the IMF. But if it's purchased by the PLA or a proxy bank, a commercial bank, or a sovereign wealth fund on behalf of the PBOC, none of these things are reported. If they purchase gold that is under the 999 purity, they don't have to report that either. So they buy the doré and the concentrate from the miners and bring it home and refine it themselves. They're the largest producer, accumulator of gold in the world. Alistair MacLeod 2 years ago was saying he believed they had 38,000 metric tons, 5 times what we do, 18,000 by the people, 20 by the state. They've been telling their people for years to buy gold and incentivizing them to do so. So my guess is that, let's just pretend that the West has all the gold they say they do. There's just giant IOU stickers on top of the bars. I don't know. It's annoying to me that they would be anything less than transparent. And I think it signals to the world that, it lacks trust. And then you look at the Chinese and it's the opposite. But in a world that is moving in this direction, the last thing you would ever want to do is tell people how much you have and how much you're accumulating, as the trade would be crowded out. Everyone would run to accumulate it. So I guess what I'm really getting at is that I truly believe China has way more than anyone in the world, far more than we do, and it would be in their best interest to keep that close to the vest. And by the same token, if you believe the guys at GATA, like I do, they would tell you that the majority of the gold that the West has claimed to have has been leased out, pledged out, sold to keep the prices down for years and years and years. And if not, then just why not appease the people who are saying, why won't you do an audit, and just open it up to be audited? It is the gold of the American public, so just audit it. And anything short of that doesn't inspire confidence, and I think that's a bad thing.
As we expand on the implications discussed by Andy Schectman, it becomes increasingly evident that the current financial dynamics are both a challenge and an opportunity. The systemic shifts in global monetary policy, the evolving role of central banks, and the unprecedented deficits in precious metals like silver and gold paint a compelling picture of what lies ahead. Let's delve deeper into these factors and what they mean for investors and the world economy. Schectman has been vocal about the imbalance between physical and paper markets, particularly in silver. The staggering 240-to-1 ratio of paper silver to physical silver is more than just an anomaly. It's a symptom of a system that prioritizes speculative trading over tangible value. This manipulation has kept silver prices suppressed for years, but the tide appears to be turning. As awareness of this disparity grows, investors are beginning to recognize silver's potential as both an industrial metal and a monetary asset. The industrial demand for silver cannot be overstated. As countries push toward renewable energy, electric vehicles, and advanced electronics, the need for silver is only increasing. Solar panels alone consume vast amounts of silver, and with global commitments to green energy, this demand is projected to grow exponentially. Yet supply has not kept pace. Mining production has stagnated, and deficits have become a recurring theme in the silver market. Schectman aptly describes silver as the investment of a generation, pointing to its unique position at the intersection of technology and monetary preservation. Central banks' behavior offers further validation of silver and gold's importance. In 2023, central banks purchased a record-breaking amount of gold. These institutions, responsible for managing national reserves, are clearly preparing for significant changes in the global monetary landscape. For decades, gold was considered an outdated relic of the past. Now it's clear that central banks see it as a cornerstone of stability in an increasingly unstable world. The same trend is starting to emerge in silver, with countries like China and India increasing their purchases. China, in particular, is a critical player in the gold and silver narrative. As the largest producer and importer of gold, China's actions reveal a long-term strategy to strengthen its position in the global financial system. Schectman has pointed out that China's gold reserves are likely far greater than officially reported. By accumulating gold through unconventional means, such as buying unrefined door bars and refining them domestically, China has quietly become the largest holder of gold globally. This strategy isn't just about wealth accumulation. It's about positioning itself as a dominant force in any future monetary system that may emerge. This brings us to the idea of a gold-backed currency. The concept has been floated by figures like Judy Shelton and Scott Pent, who argue that reintroducing gold into the monetary system would restore fiscal discipline and trust. Schectman sees merit in this idea, especially as countries like China and Russia appear to be laying the groundwork for a gold-backed trade settlement system. Such a shift would have profound implications for the US dollar, which has long held its status as the world's reserve currency. A gold-backed system would impose limits on government spending and debt issuance. While this might seem restrictive, it could be the discipline that modern economies desperately need. However, implementing such a system would require revaluing gold to much higher levels, potentially $10,000 or more per ounce, to account for the massive amounts of debt currently in circulation. This revaluation wouldn't just benefit central banks, it would create significant wealth for those holding gold as a store of value. Silver's role in this potential reset cannot be overlooked. While gold is often seen as the ultimate safe haven, silver's dual role as an industrial and monetary metal makes it uniquely positioned to benefit from both economic recovery and financial instability. The silver-to-gold ratio, historically around 15:1, currently hovers near 80:1, suggesting that silver is significantly undervalued relative to gold. If this ratio begins to normalize, silver could see explosive price growth, outperforming gold in percentage terms. For individual investors, the message is clear: follow the money. Central banks, sovereign wealth funds, and institutional investors are all increasing their exposure to gold and silver. This is not a speculative move. It's a calculated strategy to hedge against systemic risk and prepare for a potential monetary reset. By aligning their portfolios with these trends, retail investors can position themselves to benefit from the same dynamics driving institutional demand. Schectman also emphasizes the importance of tangible assets in an era of uncertainty. While cryptocurrencies like Bitcoin have captured the public's imagination, they lack the intrinsic value and historical track record of gold and silver. Cryptocurrencies are speculative assets, subject to extreme volatility and regulatory uncertainty. In contrast, gold and silver have stood the test of time, serving as reliable stores of value for millennia. The geopolitical landscape adds another layer of complexity to this narrative. Trade tensions, currency wars, and shifting alliances are creating a more fragmented global economy. Schectman warns that policies like tariffs and sanctions, while aimed at preserving U.S. dominance, may inadvertently accelerate the decline of the dollar's influence. Countries like China and Russia are already developing alternatives to the dollar, including trade settlement systems that bypass traditional financial networks. As these dynamics unfold, gold and silver will play an increasingly central role in preserving wealth and facilitating trade. The window of opportunity for investors is narrowing. Once the broader public recognizes the importance of these metals, demand will surge and prices will likely rise sharply. Schectman advises investors to act now, while prices remain relatively low and supply chains are still functioning. The ultimate takeaway from Schectman's analysis is that gold and silver are more than just commodities. They are lifelines in a world of growing economic and geopolitical uncertainty. They offer not only protection against inflation and currency devaluation, but also a hedge against systemic risk. For those willing to embrace a long-term perspective, the rewards could be substantial. The question is not whether gold and silver will rise, but how high and how quickly. As the world grapples with unprecedented challenges, these metals are poised to reclaim their rightful place as the bedrock of the global financial system. For investors, the time to act is now. By aligning with the strategies of central banks and institutional players, individuals can secure their financial future and position themselves to thrive in the new monetary era that is undoubtedly on the horizon.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.